and we're looking at the company financial statements. So looking at our working paper, we have been asked to complete the statement of comprehensive income and the following notes. So we're going to start off with doing the statement of comprehensive income. So let's look at our information first. So information relating to Mkhize Motor Limited. Mkhize Motors Limited is a South African listed company that trades in small to medium size electrical motors that are used in commercial products. They have an authorized share capital of 6 million ordinary shares. They add a standard markup of 200% on the cost of all goods. Their latest financial year is 28th February 2023. That's the year we're going to be looking at. The next information is giving us extracted balance from the financial statements on 28th February 2022. So that's telling us those are opening balances. Okay, then we continue. Extracted balances or totals from the pre-adjustment trial balance for the year ended 28th February 2023. So we will be applying the adjustments to the following values. Additional information relating to shares and dividends for the year ended 28th February 2023. So this is share and dividends information. That won't be affecting our statement of comprehensive income, so we'll be coming back to that later for the other questions. And then we have additional information and adjustments that still need to be taken into account. So this is what we'll be looking at for our statement of comprehensive income. Okay, so first off, with our statement of comprehensive income, we have some of it filled up already. So start off sales, cost of sales, gross profit. Then we're given our operating incomes. Then there's some spaces for any adjustments, for any line items that we might find from the adjustments. The next up, we have operating expensive. Same there. We have some spaces. Then operating profit. Then we have interest income, interest expense, net profit before taxation, and taxation for the year. And then we are given net profit after taxation. So we won't be needing to calculate that. So just looking at our pre-adjustment balance. So for the statement of comprehensive income, the information that in both the balance sheet section and nominal account section is relevant, but the line items that we find in our statement of comprehensive income are from the nominal account section. So we have sales here, as we do have there already, but remember, to get our full sales amount, we must take sales minus debtors allowances, because debtors allowances decreases our sales. Debtors allowances, those are the returns by our customers. So then we'll go to our sales and subtract the debtors allowances amount of 420,000. We haven't gone through our adjustments yet, so we're gonna stop there with anything concerning sales. And then there's nothing else from the trial balance, the pre-adjustment trial balance, that will be applying to the statement of comprehensive income for now. So let's go to adjustment. A customer has prepaid the service fee of 2,800 for the service to his motors that will be carried out in March 2023. Excuse me. So we end our year on the 28th of February 2023. So anything after that is for the next period, the next financial period. And we are already told that it was a prepayment. So now that service fee, that income is income received in advance. So that 2,800 will be subtracted from the fee income we have already, because it does not belong to the current year. We haven't earned that income yet. It's income received in advance. Okay. Now we look at number 2. It was discovered that the water and electricity account for February of 7,200 was never paid. So the water and electricity account of 6,200 was never paid, making it an accrued expense. And it's for February, so meaning it's part of the current financial year. So that will be added to the water and electricity expense for the current year. So remember, with accounting, we're dealing with the accrual basis. So it does not matter whether the expense has not yet been paid, as long as it has been incurred. Just like income, it has to be earned. If it hasn't been received yet, that doesn't matter. We need to include it in the relevant financial year. So we add the 7,200. Then continue. Next up, we have the company donated goods to a local charity. This meant that a gross profit of 12,400 was not made, as the goods were not sold, because we only get gross profit if the goods were sold. So this is not a sales transaction, this was a donation. So those will cause a decrease in our inventory. This will cause a decrease in our inventory, and we need to calculate what the cost price is for those goods. They only gave us what the possible gross profit would have been if it had been a sales transaction. So, going back to our background information, we're told a standard markup of 200% on the cost of all goods. That was what Mkhize Motors adds. So, if markup is equal to 200%, then our cost is the 100%. Remember, selling price is 100% plus markup, which is in this case 200%. So we are looking for a cost. We are given the gross profit. Markup equals gross profit. So 12,400 multiplied by what we're looking for, which is the cost, divided by what we have, which is the gross profit, and that will give us our cost of 6,200. So there you have it, 6,200, and we'll be minusing the 6,200 from our trading stock as well. An amount of 32,000 for an advert that was placed in the local newspaper in February has not yet been paid. So similar to the water electricity account, this belongs to the current financial year, so we'll be including that to our advertising expense. 32,000. The newspaper had purchased a parking garage door motor for 7,500. So that was a sale. The sale has not been recorded, as it was agreed that Mkhize Motors could deduct this amount from the amount owing for the advert. So this was a sales transaction. We need to record that as a sales transaction. Yes, according to the debtors control and creditors control, the different accounts will be dealing with that transaction separately in a different way, but as to what would usually be done. But for our statement of comprehensive income, we need to record that sales transaction. So that was sales of 7,500. Then we need to calculate the cost. So that will be 7,500, which is sales, multiplied by 100, which is our cost, divided by 100 plus markup, which is representing the selling price, which is what we have. And that will give us, give me a second, 7,500 times 100 divided by 300, which will give us 2,500. And we add that to our cost of sales. Alright, then we continue. We have consumable stores. The bookkeeper forgot to reserve the transaction for the transaction for the consumable stores on hand on the 1st of March 2022. So, if you remember, with the information given, we're given opening balances, and there we have consumable stores on hand of 1,250. So these were consumable stores left over from the previous period. So in the current period, we need to include those into our expenses as well, because they'll start using the consumable stores from last year, then the ones they've purchased. So these need to be included into the expense for consumable stores. And as you can see here in our SCI, we don't have consumable stores yet. So we'll be taking the 1,250. So now it will be debit consumable stores and credit consumable stores on hand. So we're deducting the asset and increasing the expense. And then from our nominal account section from the pre-adjustment TB, we have consumable stores of 45,700. We add those are our purchases for consumable stores for the current year. Let's see what else they tell us. 2,250 worth of consumable stores were ordered and recorded. However, it has not yet been delivered as the supplier is still waiting for certain items. So we don't have those with us yet, but we have included them in our purchases. So we need to deduct that minus 2,250. And then for 5.3, we're told the annual stock take indicated that the following was on hand on the 28th of February 2023. Consumable stores, 1,960. If you have it on hand, you need to now take it to your assets. That's an asset, so we need to subtract that as well from our consumable stores. So minus 1,960. Okay, I forgot about using this. Okay, so that would be 1,250 plus 45,700 minus 2,250 minus 1,960 to give us 42,740. Yeah, then we continue. We in the annual stock take, we're also told this is what our trading stock is, 672,000. So something I also forgot with the inventory, with the sales transaction, we're told that it had not yet been recorded. So in our inventory, we would have deducted the 3.5 from that as well. Wait, was it 3.5? 2.5. 7,500 times 100 divided by 300. It's 2.5. On that sales transaction, we would have also recorded a reduction of 2.5. Yeah. Minus 2.5. Okay, so now we're trying to calculate our trading stock deficit. So we take 695,000 minus the 6,200 minus the 2,500, and then we minus the stock on hand of 672,000. And that would give us 14,300. Trading stock deficit. Alright, then we continue. Depreciation on equipment is calculated at 20% per annum using the straight line method. Okay, so let's look at our equipment. We have equipment of 1,160,000 and our accumulated depreciation is at 935,000. So let's see. 1,160,000 times 20%. That gives us 232,000. So now let's check if there's enough of the depreciable amount. So our carrying value would have been 1,160,000 minus 935,000. And that gives us 225,000. So as we know, we can only depreciate our asset up to R1. So this depreciation is more than what's available for us to depreciate. So then our depreciation for the current year would have been 224,399. And we add that new line item here. 224,399. Okay, let's continue. We are told that it was agreed that rent would only be increased by 5% on the 1st of November 2022. The tenant agreed to pay a 9,000 deposit. If the tenant agreed to pay a 9,000 deposit, the deposit was received but not recorded. The rent for February is still owed by the tenant. So, the tenant has agreed to the terms, has agreed to pay the 9,000 deposit. So, the increase will only be 5% on the 1st of November. Our year ends on February, but we still haven't received February rent yet. So that means from the rent given here, the rent given here of 89,200, that's rent for 11 months. Okay, so 89,200, that's rent for 11 months. And for those 11 months, we had rent from March 2022 up until October the 30th. It was at 100%. Then after that, there was a 5% increase, so it was at 105%. So we need to formulate a formula. So November, of the 11 months, November, December, January had the increase. And the rest, which is 8 months, were at 100%. So for 8 months, we are at 100%. And then for 3 months, we are at 105%. That equals the 89,200. So 8 months times 100%, that's the same as saying 8 times 1. So that's 8M. And then 3 times 1,05 would have given us 3,15M, which is 89,200. And then 8 plus 3,15 would have given us 11,15, 89,200 divided by that 11,15, and that will give us, so 89,200, divided by 11,15 would have given us 8,000. So this would have been the rent before the increase. After the increase, 8,000 times 1,05 is 8,400. So the missing rent from February is 8,400. We add that. Okay, let's continue. The bank statement for February was received. It indicated that the following had not been recorded by the business. Bank charges of 390. So we go to bank charges plus 390. Interest on the credit balance 450. Okay, so according to the bank, if you have a credit balance, that means you have money into your account. So that means you would have earned interest. So this would be going to interest income. So we go and say plus 450. Then a debtor who had previously been written off as a bad debt returned to pay the 7,000 that had been written off via EFT. So that would have been bad debt recovered, which is income. Of 7,000. In addition, the following was discovered. An EFT payment to a creditor of 7,200 was recorded. It was to settle our account of 8,000. It was not processed by the bank. The account number was entered incorrectly by the business. So we paid someone else. We didn't pay the right creditor because we entered the account number wrong. So then we need to reverse the transaction that we recorded. Now we're sitting in an account of 8,000 and we only paid 7,200. So that means the rest would have been 800, and that 800 would have been discount that we received for settling our account. So now we need to reverse that discount received. So we go to discount received and minus the 800. Next up, we have a debtor owed 9,600, who owed 9,600 was declared insolvent. The estate paid 45 cents in the rand. The remainder must be written off as bad. No entries have been made for either transaction. So debtor declared insolvent, 45 cents in the rand was paid. So that means the rest, which is 55 cents, would have been the amount that's written off. So we take 9,600 times 55 cents. And that gives us 5,280, which is included in our bad debts. Okay. Then we continue. The provision for bad debts must be adjusted to 4% of our debtors. So, like I said, the adjustments before affect our debtors control balance. The amount here for the settling... Oh no, this is for creditors, sorry. That won't affect debtors, but this will affect our debtors, the writing off of the bad debt. So we owed 9,600. The debtor owed 9,600. So the full 9,600 will be reducing our debtors control because some of it was paid off and some of it was written off. So going to debtors control, we're minusing 9,600. Okay, let's see if there's anything else that affects debtors control. Okay, so no other transaction is affecting our debtors control. So we have 570,000 minus the 9,600, and then we multiply that by 4%, and that will give us 22,736, which is the new provision for bad debts. So now the difference between the two will be our adjustment. So as we can see, our provision for bad debts has decreased, so that makes it provision for bad debts adjustment under income. So that will be the 23,500 minus the 22,736, which will give us 764. Okay. Next up, a loan repayment of 24,000 is due on the 31st of May 2023. Okay, that won't be affecting our SCI. After all adjustments, an amount of 4,900 is still owing to SARS for the company tax. Okay, so that's for our taxation. Looking at our pre-adjustment trial balance, we have SARS income tax with a debit balance of 586,300. So we're told the amount still owing, and this is a debit balance. That means this is what we've paid so far. So we have paid this amount and we still owe this amount. So the total amount that was owed for the full year would be us taking the 586,300 plus the tax, which is 14,900. 586, 300 plus 14, 900 to give us 601,200. And now we can calculate net profit before tax, which will be 601,200 plus 1,402,800, because we're working in reverse. So that would be 2,004,000. And then interest expense, we're given an amount of 23,040. Okay, let's check if there are any adjustments to be made with that. So we have a loan at Million Bank, which charges interest of 8% per annum, and this is the balance. So we take the 288,000, multiply that by 8%, and you should get 23,040, which is what we have here. So we'll be writing that as is, 23,040. And we weren't told about any other interest expense. What's this? Adjustment. So that's why we're only looking at that. And now, seeing as we went over everything, we can actually just total up our comprehensive income line items. So for sales, we started off with 15,900,000, then we subtracted 420,000, and we added 7,500, and that will give us a total of 15,487,500. For cost of sales, we just have 5,300,000 plus 2,500, so that'll be 5,302,500, and we'll be subtracting that from the 15 million to give us 10,185,000. And then for fee income, it will be the 372,600 minus the 2,800, which will give us 369,800. Rent income, 89,200 plus the 8.4, which will give us 97,600. And for discount received, that will be 38,500 minus 800, which will give us 37,700. And then we look at water and electricity, 79,400 plus 7,200. Okay, for this part, you can skip the rest of the SCI, or you can say 516,000 plus 32,000, which will give you 548,000. And then 4,290 plus 390 will give you 4,680. 45,200 plus 52,000, no, 5,280 will give you 50,480. And that is our interest income, 16,400 plus 16,450 will give you 16,850. This is supposed to be a minus. Okay, and that's your SCI completed. Okay, now for the next video, we'll be going over part 2, which is 2.2, the following notes.